Good morning or good afternoon, everybody. I hope you are all doing well. Welcome to the live stream. We'll just give it a few minutes for people to join, to say hello. We are going to be joined today by Michael of TradeX. Real treat for us to have him here. Not only does he know a lot about the markets, but he's also going to be able to tell you a lot about how you guys and girls can utilize their services to make more from your trading. Because hello, Mania, Maniac, the controls. Okay. Hey, Robert. Yeah, because I think one of the things that I've seen in my time teaching people to trade is that teaching you guys and girls the skill of trading is almost the easy part. Where you can't sort of start to stumble is when you come to the psychological part of trading, and a lot of that I think is compounded by the fact that many people don't have enough capital to make their trading worthwhile. Hey, Martin, welcome to the team, by the way, Martin. Hey, Joseph. Hey, Shuri. So Michael's got a solution for all of you guys, and we'll jump more into that in a second. So let me bring him on. Give me just a moment here. I'll bring him. Just waiting in the wings. Hey, Michael, how are you?
Good, Alex. How are you doing? How's everyone doing on the stream today?
I'm good. Hey, Ian, Adam, everybody's doing well. So as I was just saying to the guys, obviously we'll look at the markets as we usually do. This is driven by everybody on the stream. So if you have particular pairs that you want to take a look at, then we'll jump into those pairs. We'll give you our views on them. We'll talk a little bit about the general sentiment of the market, and then obviously we're going to talk about Trader Act, the funded trader program, how that can help you guys and girls. But it will be driven a lot by everybody here. So please don't be shy. Make sure that it's interactive, and obviously you post your views in there. So just before we got started, Michael and I were talking a little bit about the general sentiment of the market. We have the FOMC meeting and announcement later on today. I think I'll give my view, then Michael, maybe you give your view. So at the moment, obviously, the dollar has been very, very strong for a long time. That's been off the back of expectations that the Federal Reserve are really sort of leading the pack in terms of rate hikes. They've been pricing in rate hikes at various different points this year. Where we're at today, I think essentially the markets as a whole are expecting that the Fed do nothing, but it will be what's known as a hawkish pause. So they'll do nothing, but they'll give an indication of further, a rate hike or further rate hikes going into the end of the year. So from my perspective, I don't think it does all that much to move the markets unless we get a massive surprise one way or the other. In that either the Fed come out and they raise rates today, and then they give a very strong view, not data dependent, which is what they've been doing up until now, but to say they're going to raise interest rates at the next two meetings, for example, then we'll see a lot of strength come into the dollar. Or they pause and they kind of say that they're pretty much done with hiking interest rates, in which case we'll see the dollar fall off, a lot. What you all have to remember is that the dollar has a little bit of a strain, well, not a unique dynamic in that, it benefits from when sentiment is positive towards the dollar, but it also benefits when sentiment is negative generally across the globe. And as Michael and I were discussing just before the call here, that, it's most regions around the world are facing some of the same similar issues, which is going to play into our general view on the markets. What do you think there, Michael?
Yeah, I completely agree with you, Alex. We're kind of stuck right now. Do you break everything all at once, or do you go with a slow break? And it seems like around the world they're just kind of going a little bit slowly. Everyone's kind of letting the U.S. take the lead and then go from there. The eurozone inflation was around like 5%. It came in at recently, so they still have a lot more work to do before they get there, but they just can't do it all at once. And
Yeah.
you're seeing that all over the place. But quite interesting. I think you're going to have some U.S. weakness come in over the short term. If you're looking at a lot of the charts right now,
Yeah.
Aussie USD, USD CAD, Euro USD, um, they're kind of at inflection point where there's a lot of strength for the US, and
Yeah.
um, it's either got to really like bust open, and the US is going to get a lot stronger, or you'll have somewhat of like a small recoil over the next few weeks happens, and I guess this could be the catalyst to make the U.S. a little bit weaker for the time being. Like Euro USD is at 107 when it was at 112 just a couple months ago. So I think there's room for that to kind of bounce back up, have the euro get a little bit stronger. The euro has to raise interest rates to battle inflation, and if the U.S. kind of is at a standstill, then that gives it kind of room for the story to develop.
Yeah, I mean, it's going to be interesting to see what happens there, because I think the ECB is sort of indicating that they might be done with their rate hikes. But just looking at the chart here, as you said, it's at a support point. So if the Fed do disappoint, considering that a lot of people have been long the dollar up until now, it doesn't even have to necessarily be the fact that people are going to completely sell dollars and buy euro. It might just be that they come out of their positions altogether to say that they're not entirely sure of the overall direction. Which, if people are long dollars, then they need to sell dollars, which is essentially going to make things like this bounce that we see with the euro here. And then obviously with the dollar yen, we'd see this come off a little bit as well. So that might play into that. But it's an interesting week this week. We've got the FOMC later, Bank of England tomorrow. So we'll wait and see how it plays out. But I think I agree with you. We'll know a lot more by Friday of this week as to how these markets are going to start moving. Um, sorry, go on.
I was gonna say always you always have good technicals lining up with fundamental information. So normally the charts will kind of give you an indication before that fundamental news will kind of hit the markets and send it in any given direction.
Yeah, no, I agree. I do. I say that to our traders a lot that, essentially once we've got a fundamental view, a lot of it is reflected in the charts. We trade a little bit longer term. So we tend not to avoid big announcements if we're already in it, because the view is that if the chart, like you said, if the technicals are saying that the chart is moving up, it's most likely because the fundamentals are pointing to that as well. And it takes a lot to change change the trajectory of the ship. If you're changing the direction of the Titanic, it doesn't just do it all at once. It's going to take a number of economic announcements. Yeah, so I agree from that perspective there.
And I like the longer term perspective because oftentimes you might be right with your theory, but you might be wrong in the timing. So if you have a longer term view, that allows you to kind of see everything unfold in over a longer period of time, and can carry less risk by just looking for one singular event.
Absolutely. And actually, whilst we're on that, that's a question I have, just sort of taking us towards the prop fund. Do you kind of see a correlation between I know you don't necessarily know what timeframes people are looking at, but potentially you can see how long people hold trades for. Do you see a correlation between like trades that are held for the longer term and more successful traders versus those that are like very in and out and not so successful at all?
Oh yeah, yeah. Like if you're scalping, you're just going to eat yourself up because you're always looking for one direction or another. The the best traders that we've seen pass are they're putting in very small lot sizes relative to what they're doing, and they're just nibbling away, and they're letting the order kind of take points out of the market rather than just put in a big order with a lot of leverage and try and capture 10, 15 pips. And that there's definitely a correlation. You want to be catching those bigger moves and have that patience in order to be successful. 100%.
Yeah, no, I agree. There was another broker back 10, 15 years ago that did a study into their customers, and they found the same thing, that essentially customers who were in trades for a longer period of time, which indicated that they were more swing based traders, tended to be more profitable in the long term than the short term. Now, obviously, short term you can get lucky and you can make a lot of money very quickly, but you don't want to survive by luck. I've always been somebody that I want some sort of a dependent income stream when I'm trading. So from that perspective, I'd rather take less, but know that it's a more likely outcome, than take more and realize that it's just like a lottery ticket win, for example.
Well, yeah, on the risk side, as we're looking to hedge which traders to hedge in the whole scheme of things, it's are they trading like it's a coin flip? So if they're trading like it's a coin flip, you can only win so many flips in a row.
Yeah.
But if you actually have, but and that's how you differentiate between someone who actually has a strategy or not.
Yeah, no, absolutely. Just quickly, Robert says, wait and see if the Bank of Japan take any intervention. Um, so the Ministry of Finance already did a little bit of that overnight just by talking to the markets to say that, that is a tool that they can call upon. However, I will tell you, and there's a video I just released on this channel yesterday where you can look into where I do talk about interventions a little bit. And my experience of it in the past is that if the central banks do intervene, often it's an opportunity to fade their move, so to go against them, unless they have a concerted effort and they're including other central banks around the world. If they're just acting on their own, then a lot of the time you will see a spike. Of course, you will. So you'll see the market move, in the dollar yen's perspective. So if we go and take a look at the dollar yen for a second here. So what you might see is that they think that the yen is getting too weak. The dollar yen will sell off, but then very very quickly it will be bought back. So that's the sort of thing that I would imagine would happen. So if they did intervene and it's just once, you might get a little bit of a sell off. But I would look at that as being an opportunity to look for a buy and then see the market push back up. And I think when we start to get up towards the 152 levels, then we might see some more serious action. But at the moment, you're just seeing a lot of talking about potential intervention, which has an impact on the market, but not that much of an impact. So yeah, so keep your questions coming in, by the way.
I would add on that if you go back to August 2022, that spike over there. I remember
Yeah,
that day watching the markets, and you had you had people kind of saying, well, the 150 level is something that they've kind of quoted as quote unquote that they're going to defend that level,
yeah,
and that day where it broke it, everybody thought they broke the Bank of Japan, and that's why you had that spike over there. And then all of a sudden, they're like, "No, you didn't break us. We're going to break you." And then you just see it go down for the next
yeah,
probably month or so. And like you said, slowly everyone's trying to push it back up, and
yeah,
that
absolutely. They do get involved, but it's often an opportunity unless the fundamentals change. And where this might be a little bit different is if the Federal Reserve come towards the end of their rate hike cycle, and the Bank of Japan have already started saying that they think they'll have enough data by the end of this year to move from a loose monetary policy to tighter monetary policy. So to go from negative rates to positive rates for the first time in a long time. That dynamic will pull the dollar yen lower. So that's something that I'm looking out for at the moment. Since February of this year, for those of you that are in my trading tribe group, you'll know that we've been saying that we're just going to be long the yen. But that isn't, I'm not doing that blindly. I am very much looking for an opportunity to start shorting this because I think with the yen pairs, they're often the most clear cut opportunities. Once you get through the chop and the intervention and all of that, they're the ones that once you get a trend gets going, it's a very, very easy trade because it doesn't change very quickly because the Bank of Japan don't maneuver that quickly at all. So we'll keep an eye out for that. Whilst we've obviously got Michael here, maybe let's talk a little bit about the funded trader program. You guys, I put the link in the description, but I'm going to put the link in the chat again over here. This is so Michael's from Tradiac. For those of you that don't know him, for those of you that have a part of my community, you'll know who Michael is. But essentially, he's kind of he's taken the funded trader world by storm. They've got an offering where they're giving traders really a real shot at making money from the market. So none of this sort of ridiculous evaluation criteria. They're really giving people the opportunity to make money. So maybe Michael, you can say a little bit about what you're doing, why it's so innovative, and how it helps everybody here.
yeah, definitely. I'd love to jump in there. There's lots I can share. The big thing is being able to limit your risk in the markets. That's probably the biggest points about a funded trader. So I'll tell you a little bit about a personal story. If you see me before with Alex, then you probably heard the story. I apologize, but I did a whole bunch of trading as well for myself. I was trading for family and friends, and I was with a broker that um, they widened spreads severely as they were kind of going out of business. It was during the Brexit, and I had a position. It was hedged, and they widened spreads by 3,000 pips, and they like knocked me out of the markets in both directions. And they pretty much took took almost like 150,000, 200,000 from me, and I was trading friends and family money at the time, and it was pretty devastating to be able to have to go over to the friends and family and say, "Listen, I lost the money while trading," and let me just mute that. And um, I don't want any trader to have to go through that, to have to suffer through hurting relationships with your family, or or losing face with them. It's it's really difficult, and probably the biggest problem for a trader after finding a successful strategy and success in the markets is, how do you get access to more capital? Because listen, if you're going to be trading a $2,000 account, you make 20% on that. You made $400,
Yeah.
but the amount of time and effort that you're putting into trading is is a lot. And if you've kind of if you found that success in there, you want to be able to take more money out of the market. So, and essentially assuming that the average trader deposits on their account between $500 to $3,000 in their trading account. Funded trader model really gives them a chance to utilize that capital and trade huge sums of money in comparison. For just under $1,000, dollars not pounds, you can access over $100,000 in trading capital to be able to make profits off that.
Yeah,
Being able
exactly.
to,
Sorry,
sorry,
I was just going to interject there and just really back you up to say that I think is one of the most appealing things. You said if you got $2,000 and you make 20%, you make $400, which is great, but you're not going to. It's not going to change your impact your life. But if you
yeah,
do, 20% on a $100,000 account, and actually let's even go a step back and let's say you do 5%, like very conservative, more than achievable on an average monthly basis. That's a 5K return.
yeah,
For what would be 1,000 or just under $1,000 worth of collateral that you have to put down.
yeah, and that's a completely asymmetric risk to return offering over there. To be able to make 5% on or $5,000 on $1,000 risk in the market. That's what was that? I gotta get the calculator over here, but
What
it's
was it? 5,000 to $1,000 risk. It's like
yeah,
500% return.
yeah, 500% versus risking that versus a 500% versus a 5% return. It's completely the
It's crazy. And the thing is
yeah,
that you make it something where I said at the beginning, one of the problems that a lot of people have is that they learn the skill of trading and then they're they're forced to try to either increase their trade size, to a level that is just that they're not going to survive. So, if you're doing 5-10% risk of your account, it's never going to work, not just from a monetary perspective, but also from a mental perspective. So when I teach people to trade, I make them aware that you have two types of capital. You've got monetary capital, you've got mental capital. Now, if you deplete your account by 50%, you've still got monetary capital there, but your mental capital might be at zero by that particular point in time. And the other thing obviously they do is that they'll take more trades. So they'll sit there going looking for 100 trades a day, which they don't need to do. If they've got $1,000 in an account, or $100,000 account, sorry, and you just need to make 5% a month, that's literally 1 to 2 good trades a week. and you can make that, and you can do that swing trading, you can do that longer term, so then you get your time back as well. So yeah, sorry.
Yeah, no, 100%. Like you don't want to force the markets. Like the what you said, the mental capital. You start your account and you're essentially at the peak of the mountain. You have a fresh slate, but as soon as you start to go 5%, 10% under, all of a sudden the mountain just like shoots up, and it's having to recover from that. Then you just have to make more and more to recover from that, and that is that that's really hard to overcome. And I guess the good thing about the funded trader model is you're only risking a certain amount of capital, and
Yeah,
if you do have to start again, it's a lot easier to start again from that level rather than saying, okay, I just lost $10,000 of capital. I have to go and climb it again. Well, maybe you just lost $100 for your assessment if you took a $10,000 account, and then if you try that again, but as soon as you make a few percent within there, you've made that money back, and it's not trying to just make back 10,000, $100,000. Trust me, that took me a while to make that money back and pay everyone back, but I didn't feel complete until I did that,
yeah. And
and
that's the thing, with regards to sort of being able to start again where you left off. So I've heard a lot of people say, a 10% max drawdown, depending on the route that you go with, oh, it's not enough. But I can tell you from when I was running a fund that just because people gave you their money, it wasn't go and destroy 100% of my account and then come and talk to me. We had frameworks in place where we would say that if you were 10% drawdown, then you have to have a conversation with the investors, and either they would give you permission to continue trading or they take their money out. So the model that Tradiac has, where they have a 10% max loss, where you then have to either take another evaluation or whatever, is not too dissimilar to what you would have if you were running a fund. In any case, you wouldn't have license to go and trade it into 90% drawdown without anybody having a conversation with you.
yeah, that's exactly that. If you're going to be trading real money, then you have to have accountability, and the rules help keep the accountability in place. Um, and I guess it kind of gets within the mindset of like how how to how do the firms make money, and that's been
Yeah.
like a big issue that's been coming to play with some of the background noise in the industry recently.
Yeah, there's been a
That
lot of that. Maybe you can talk us through a little bit about what's happened and why that's happened and how Tradiac are different from that, because I think most people are aware.
Yeah, so there's I read uh, the whole what is it, the United States District Court Attorney for the District of New Jersey, or the whole CFTC complaint, and it was it was interesting. It was mind opening. There were, I guess, let's break it down. There were three things that they did wrong. They committed fraud on a number of levels. We can jump into those shortly after. They were selling leveraged FX on or off exchange products to U.S. clients. So whether it's a real account or a demo account, it still counts as a leveraged product for U.S. clients. Um, Three, they were making their own markets, so they weren't using a third party broker or anything like that. So they were acting as a market maker, which was unlicensed within the U.S. So they did those last 2 points were essentially like non-starters for anyone who's operating a prop firm in the U.S. They pretty much, those two arguments say don't operate a prop firm in the U.S.
Yeah.
Don't service U.S. clients. Those products are completely legal. So um, as a result of that, we stopped working with U.S. clients just immediately after reading that and understanding what their stance is. Until that, we were working with a lawyer who's NFA based and whatnot, and they've they were selling hundreds of platforms to white label platforms to other prop firms and saying it was okay. So everyone was under the assumption that yeah, let's run this business in the U.S. But based on that, it was clear don't operate in the U.S. The fraud that they operated on a number of levels were one was uh, misleading statements in the fact that they said we make money when you make money. When you read their internal messaging that they were investigating, it was clear that they were wanted their clients to lose and that they were making money purely from the assessment fees that were being collected. Three, they were manipulating funds within there, so the pricing, so that is another fraud. And there were a few other things that they were throwing at them. They're really throwing spaghetti at the wall to go after them. But the main things are on the fraud section is where they were misleading in how they make their money for their business. Two, they were manipulating the price feeds, so they weren't providing a fair environment while they were doing that, which was fraud. And also by not sending any trades through to the market, they were running essentially a business that runs in a Ponzi scheme where they need to collect more assessment fees in order to be able to pay out the people that are winning.
Yeah.
Um, I want to also address that because there's in order to run this business, I want to dig deeper down into the numbers, and so we run our business in a way where there are assessment fees, and what they have two factors. Those assessment fees: one, people respect the money that they get, because if they get just demo money and free play money, they're not going to respect that. And two, we also have a partnership with a hedge fund, and they monetize the data that they're getting from the traders. So from that, they trade the funds. Um, they trade their own funds based on the signals that they're taking from the data that they're collecting, and that's a profit center for how we monetize it. And also, they're capitalized, so we're able to take earnings out of that capitalization pool and pay the traders out of. I think when regulations come into play, I think that's going to be a big factor, is being able to specify we're capitalized up to this amount, and this is how we're going to pay the traders from this pool of funds. We can you can top that pool of funds off of from assessment fees that you collect, or trading profits that you make from hedging the data, or utilizing the data in any way that you see fit. Now, going back to that, they were complaining that they were not offering live funds. So everybody's been seeing everybody say, we offer virtual funds, we offer virtual funds, we offer virtual funds. And then you're kind of saying, well, I want to be with someone who's offering live funds. And I'm going to kind of jump in there and say, I don't think anyone can actually offer live funds to trade off of. And I'll go into the numbers and just break them down for you. They had $310 million of sales. Generally, based on the dollar amount that you purchase, you pay about 1% of capital that you're going to get. So if you put down 1% of capital, 310 million, and so 100 times that would be $31 billion of funded accounts that they would have had to give. Based on giving out the $31 billion in, I guess, assessment accounts that they gave, they had 135,000 clients, and about was it either 24,000 or 28,000 that from those clients that were funded with live capital. So that's about 18%. So if you're going to say 18% of clients got funded, so 18% of 31 billion is about 7.1 between, I think I did the numbers at 10, so I think it's between 5.75 billion. They would have had to been capitalized enough to fund 5.75 billion in live accounts for clients to trade. Now, given that most clients are potentially going to lose that money, they would have at risk 10% of that losing to the market. So almost $575 million they could potentially lose to the markets off of that 5.75 billion that they're funding. Their model only collected 310 million in fees, and they also had to, and from there they paid out 130 to 150 or million or something. I have to go back for those exact numbers, but um, the amount of money that they would have paid out versus the amount of money that what they could have lost in the markets doesn't doesn't balance itself out. So it would have been a net loss business if they had to put everything into the live markets and have that traded.
Yeah.
So they did a heck of a lot wrong, but I think it's also uh, stepping aside from what they did wrong. It's in order to run this business, it's not possible to
Sorry, can you just give me 1 second? I'll be back
yeah.
in 1 second. Sorry about that. Door always seems to go at this time. I'm going to have to reschedule these things, so it's like an hour later. I swear to God, the postman decides to come at this exact time. So apologies, everybody that's watching this as well.
No
But
problem.
yeah, so you were just saying that essentially to allow people a prop firm, a funded trader program like this to function, there's just no way that you'd be able to do it all with live funds. It doesn't make any sort of like economic sense.
Correct, correct. But and I also want to focus on the point where they paid out almost 150 million or so in funds to clients, and if the clients didn't have that leverage available to them to be able to use those other people like the fund's money, let's just leave it from the fact that it's my Forex funds. But if you look at how much money was paid out to clients, if you kind of divide that down, these people like actually made real money in the markets while they were doing that. If they didn't have that, if they didn't have that access to that leveraged capital in a way, they probably would have made $10 million in the markets, and they
Yeah.
were able to make over 150 million in the markets. So
Well, that's
there's
one
a
of the
lot of
things.
good that this program has to offer that I want to focus on. It's the good that it has to offer.
Yeah, I was going to say that's one of the things. People are making real money. I see in the Discord community that Tradiac has. Every week you'll talk about how much has been paid out in fees and who's made what and so on and so forth. And you get traders in there that are making 5, 10, $20,000, on a weekly basis, which, let's be honest, if, it doesn't matter who you are. For someone to make, let's just call it 10K in a week, all right? And let's work through the numbers and see how this would actually be possible. In reality, you might have a lucky week where you do 10% on a 100K account, but then you need that 100K to be able to do it. Okay, the more likely scenario, the more conservative and sustainable scenario is, maybe you make, 1 or 2% from a half a million or $1 million account, but then you would need that capital to be able to do that. So the sorts of returns that these people are able to make as a result of being able to access greater pools of liquidity is something that's almost impossible for traders to access on their own, unless you come from a very, very wealthy family or something like that, which is
Yeah,
probably not the majority of the market out there.
100%. That is 100% correct. Like either you got to have a rich daddy, or you got to have connections with banks that you were able to be lucky enough to get in the industry. And when I graduated from business school and I was trying to get inside the banks, I couldn't get anywhere near the banks unless you had a daddy who had a nice sized bank account over there that called a friend and said, give my son a good job over there."
Yeah,
So it
no, it's
was
true.
it was super hard to get into the banking industry.
But but for everybody watching this, and please, send in any questions that you have for Michael or indeed about the markets, because, like I said, it's interactive. It's for everybody that's watching this. But there is a real opportunity there, assuming that you go with a reputable company, so a company like Michael's that really do pay out. They're doing things above board and they're doing things the right way. As I said at the beginning, the problem from my personal perspective, where I teach people to trade the markets, is that I can teach people the skill, But that's all. The missing part has always been able to give them access to the capital, so that once they've learned the skill of trading, and I'm not saying that I can teach anybody to double their account in a month. I can't do that because I can't do that myself. But I can teach people to make 5 to 10% a month, maybe a greater return when the opportunity arises. But that sort of a return. Now, if you translate that into what a typical trader may have, which at the beginning you said is like $500 to $3,000, a 10% return is never going to allow anybody to, leave their job, for example, do whatever it is that they want to do with that money. But if you take a $10,000 account or $100,000 account, suddenly it starts to have an impact. And one of the things that's quite important to note, though, is that you don't have to start at $100,000 with Tradiac, do you? You can actually start with a $10,000 account at like a less than $100 evaluation fee, and then build up from there.
And I got to give you some props, Alex. And also I'd like to give some props. I won't say their full names, but I know there's a Jonathan, there's an Ian, there's a Grace. They've they've been trading their accounts like low and slow, and they're making great progress doing that. And um, uh, most clients that come from Alex's community, your community, like they've been doing super well trading it and making up the ladder. So we don't give huge discounts out there, but I know we've been working with Alex to give some better discounts
Yeah,
for the community, and better traders are coming from there. So like it's much better data that's coming down the line. So that's why we're like, okay, Alex can bend our wrist a little bit because the clients and the data that are
yeah,
coming from there are much better than what we're seeing from just people trying to come in and toss a coin. And it's that's really hard to hedge that data, and that's
yeah,
not something we like to. That's easily monetizable,
yeah.
um,
But in terms of
but you're,
building the account, so they people can start $10,000 and then they can build up because you've got different levels, right? So people they don't have to go in and say I'm going to commit to trading 100K account. I can start small, then I can graduate up as my trading skills evolve. So does the amount of capital that I'm trading.
yeah, exactly. Every account scales up. So whether you start at 10,000 or whether you start at 100,000, each time you hit your profit level, it goes up based on the base amount. So if you have a $50,000 account, you hit your profit target there, we'll add another 50,000. If you hit your profit target there, we'll add another 50,000. And unlike other firms, if you breach the rules at some point, and let's face it, it's really hard for someone to hit 10% over and over and over again. Um, you don't have to start over again. You can kind of go back to the last level you're successful at. So let's say you got to $300,000, you got a payout over there, and now you're at 350,000, but you breached the rules over there. You can go back to 300,000, do an assessment from there, and then continue from there rather than going back all the way to 50K
Yeah.
if that was your starting level.
Which is a
Uh,
massive benefit because it takes away some of the pressure related to, oh, I've got a 10% drawdown, therefore I've got to go all the way to the beginning. No, it's just like you've got a 10% drawdown. It's almost like an enforced pause, as in to say, don't let this get out of control, take a moment, and then start again where you already were.
yeah, exactly. And you've already made probably a good chunk of money. So five on 50, 10 on 100, 15 on 150,
Yeah,
20 on two. So you've already made like probably 60 to 70, 60 to 70K at that level when you get to 350.
exactly. So this is, I mean, people they're making real money by the time they get to this point. Michael says, "Where is the firm based? Where's it regulated and things?"
So there's we're registered. There's no regulations for this business just yet. We started out, we were based in the U.S., and then as those rules came out, we kind of shifted towards um, we have another company inside Sweden, so we put wrapped up the business inside the company in Sweden. So it is based in
It's
Sweden
in
at this time.
Scandinavia, then, yeah.
Yeah, yeah.
Okay. Perfect. Hope that answers your question there, Michael. Are there any other questions that you guys and girls have about Tradiac or indeed about the markets? What we're planning on doing is to make this a more frequent thing with Michael. So if you don't have questions now, but you have them later, obviously feel free. Perhaps what we can do next time that you come on is we can maybe sort of like have an update, some sort of statistics as to, there's similar things that you put in the Discord group. Is that there's 5 million out at the moment, 100 grand was paid out in payouts, etc. So
We used to put that out. We kind of moved away from that. We just didn't want to. I guess in terms of the marketing, were the way that the things that they were upset with, my Forex funds, just pumping stuff out and kind of trying to lure people in. We felt like that information might might be tiptoeing the line. But I'm happy to
okay,
share statistics with the group. It's just
yeah.
not something we're posting out there anymore because it could be seen as, I guess, casino tactic marketing or something like
Yeah,
that.
I guess I kind of see that. It's a difficult one, isn't it? Because on the other hand, if you're doing it with the best intentions, like people want to know what's possible, and
Yeah,
these both motivate and they inspire people. But I don't want you guys to get into any trouble, so we can figure out what you can release to the community so that they can, get to know
yeah.
what
Happy to
exactly.
share some stats that we can do that. Just not something we want to put online anymore, and just kind of want to not piss anyone off. Our hedge fund partner is kind of putting in a petition into the FCA to ask what they think of the business and how it should be run or
Yeah.
regulated over the next little bit. So we are looking to see what it would look like to run this business in the UK in either a regulated fashion or one that meets their guidelines. So we're asking them for guidelines on what they think it would look like to run the business.
And that's actually a good thing. It kind of shows that you guys aren't a bunch of cowboys. The fact that you are seeking that approval from the FCA, that's actually
Yeah,
a really, really good thing.
and
Robert says, sorry, go on.
and I think one of the big things that you're going to see happen is they're going to ask you to kind of have a capitalized pool where you can
Yeah.
pay people out from, so that way it avoids the looking like you're paying people out of the assessment fees, which they probably don't like.
Yeah, no, for sure. Robert says, I have my own 10K live account with an additional 20K if you need it. That's really good, Robert. Obviously, that's good you have your own capital. The one thing, as you said, you're going to be joining the community next week that maybe we can have a chat about is how you can leverage that because you don't necessarily need to have 30K tucked aside for your trading. You could have significantly less than that and have access to the same sort of trading account. So there's no real benefit anymore of tying up that capital. You can put that elsewhere. You could put that into an investment pot or something, um, and go from there. Obviously, each to their own. It's a personal choice, but this is something that certainly we can talk about next week when you're on board. In any case, what would you say to somebody that says, "Well, look, I've got my own account. It's worth 10K. It's worth 50K."
I would say if you don't like trading with any rules, then go ahead, put your money at risk. But I think there's lots of people who like, well, I just want to trade like this and I just want to trade like that, and maybe it doesn't fit within those rules. But if you do trade within the rules that are out there from the programs, you're going to be lowering your risk, and you're going to be uh, your risk reward is going to be like your risk is lowered and your reward is maximized by doing this. So
Yeah, no, I would say that that's quite a good point. I didn't even think about that. That if you are trading with a prop firm, then you have these sort of inbuilt rules, which they kind of it forces you to be a better trader. It's part of the reason that I do these things on YouTube and I work with my community is that it forces me to make sure that I don't take stupid decisions and don't make stupid trades because I'm accountable to my community. If I put something out there that's completely ridiculous, and it goes out to however many people are on here or in my community, then I'm not gonna I'm gonna look like a bit of an idiot. Whereas if I don't have the community, then I do what I want. I'll probably be prone to making more mistakes than I do. And everybody makes mistakes, but it just limits what you do. So yeah.
Yeah, I'd much rather have access to $100,000 worth of capital and lose only have the risk of losing $1,000 than risking 10,000 in the markets, losing a chunk of that, and then having
Yeah,
to make that back slowly. Or if I had 10K, I'd want to be able to make. I would want to make more than $1,000 in the market if I made 10%. I'd want to make $10,000 for that. So
absolutely.
um,
The risk to reward is not even a comparison. Assuming that you trade conservatively and you trade strategically, it's not a conversation really. But yeah. Robert
yeah.
then follows up with, how's this applied to the UK where we do spread betting? So it isn't a spread betting account. It's like a regular FX broker. You would have to pay taxes on your profits, but paying taxes on your profits is a good thing because it means you're making money. So yeah, that's my particular take. Is there anything you'd like to add to that?
Yeah, I'm not familiar with the tax situation over there, but the way you're paid out over here is you're essentially an independent contractor. So it is like you were having a job as an employee, and that's how you get paid out.
Okay. Kung Lee says, what's the relationship between Nordic Thunder, and Tradiac? Why are there two firms?
So yeah, Nordic Thunder was another brand that we came out with in the past that still is operating. And as I said, as we moved, so Nordic Thunder and Tradiac, we own both of those companies. We just as a result of moving away from the U.S. after the My Forex funds happened, we shifted everything under that brand because it had an active bank account. It had active, everything was active, so we didn't have to disturb ongoing operations.
Okay, so are they the same company now? Will they be the same, or is Tradiac a new company?
For now, it's the same company. Over time, we'll probably separate the two of them once again.
Okay, all right. I hope that answers your question, Robert. I prefer swing trading off the 4 hour charts. Me too. Absolutely. It's the only way to trade as far as I'm concerned these days. It allows me
Yeah,
to do stuff like this, spend all my time, either in the gym or playing with my little children, and then just 30 minutes in an evening, look at the charts, do your analysis, and then walk away. Much better way to trade. What's your preferred way of trading? Are you a swing trader or do you prefer day trade?
yeah. I like to look at the 4 hours and dailies as well, even the weeklies and monthlies. So as you're saying, the longer term trades, I kind of just look for maximums to like extremes on the charts to hit, and then I'll put an order either above it in case it breaks out, or an order below in case it
Well,
starts to go back down. So yeah, I'm like you said, I like to live my life now. I used to be sitting at the desk like 18 hours a day and just taking a nap here, a nap there, and that wasn't fun for me at all. So now I'll just look for an extreme and then I'll let it run for a bit and just let that make the money for me.
perfect. Hasib, I thought I had replied, but I will check my Discord channel in a second and I'll reply to you straight after this. So bear with me there. Peter says, what leverage trading accounts do you allow at Tradiac? What's the leverage that you guys have?
It's 20 to 1.
20 to 1, which is more than enough, by the way.
Yeah, it all depends on which size capital you're looking for, but yeah, 20 to 1 is a lot.
Yep. Awesome. Okay. Is there anything else for Michael or myself before we wish you all a wonderful day? Have you enjoyed this? Has Michael given you some good information there? Hopefully that's a yes. Yes. Awesome.
At least hopefully they had a good lunch. Maybe they had a nice sandwich or something.
E- exactly. I'm going to put the link again to Tradiac. So if any of you guys want to go and sign up for an account there, just I'll put the link in there. You can open your account, have a browse around, get started. It's really not very complicated. I've got a video in the works where I'm going to walk through the whole platform for you all, so you can go and take a look at that. But the benefits are definitely there. And again, I will do my best to put out another video where I will go through all those benefits so you can understand why you would do such a thing. Because I understand on the surface it doesn't necessarily make too much sense, but we will get you there all the same. Plus, we're both going to be at the IX Investor Show in London in November. So if anybody is going to be there, please come around and say hello. And then finally, if you're not already part of my community and you want more information on this, then I'll put my link there. Obviously, it's on YouTube as well. But go to my website, sign up to the community, and then you'll get all of the information to do with the discounts that we can give you for Tradiac, as well as all of the other meetups and things like that. Okay. Thank you, Ian.
Alex,
Yes, Michael.
speaking of lunch over here and Simon's show, there was like a great burger place down the street from there. I tried it on the just
Oh,
as the
really?
event ended. Yeah, I'll be going there. I'll be going there at least a couple times while
Well, so
while
then
I'm
you
back there.
guys, you know where to find Michael come
Yeah,
November. Going to
exactly.
be at that
If I'm
burger
not at the
place
show, I'll be having a burger just outside.
outside the Grand Connaught Rooms. And I think we're trying to work on something at the moment as well in terms of perhaps some sort of a meetup for everybody around that time.
Yeah,
So we've got a lot coming for all of you. So make sure that you guys sign up, put your names down to make sure that you get all of that information. Michael says, do this more often. Looks like you're popular. We will definitely be doing this more often.
let's do
Um,
it.
Excellent. Then, yes, Robert, I will do that indeed. Thank you very much, everybody, for joining today. I really appreciate everybody's time. Michael, thank you so much for joining. Do you have any parting words of wisdom or anything?
Um, what parting words of wisdom? I'd say maximize your reward, minimize your risk. And just if you have any questions, let us know. We're on live chat. My email is michael at tradiac.com. We're here to help, and trading is a tough journey, so don't do it alone.
Perfect. That's an awesome message. Excellent. And we'll be back again very, very soon. Thank you so
All right.
much, everybody. Have an amazing day. And thanks
Thanks,
for
everyone.
joining the Forex Lunch. Bye now.
All right.